Today, we're diving into the dramatic end of what was, for 40 years, an incredible economic success story. We're talking about the powerhouse partnership between Taiwanese businesses and the city of Shenzhen. This relationship basically built a global export empire, but now it's all coming to a stunning close. So, let's get into how it all unraveled.
Okay, let's kick things off with some numbers that really paint a picture here. So in the first 11 months of 2023, Taiwan's exports just skyrocketed, up an unbelievable 34.1%. Now, during that exact same time, Shenzhen, which was once China's undisputed export champion, actually saw its exports fall by 3.5%. I mean, that contrast is just staggering, right? These two economies were so deeply connected, and now, well, they're heading in completely opposite directions.
And this split gets even clearer when you zoom in on the all-important U.S. market. In just 1 year, Taiwan's exports to the United States jumped by a massive 73.4%. Wow. Meanwhile, Shenzhen's exports to the U.S., the very cornerstone of its economy for decades, they went into a sharp decline. And this was no accident. This was a direct result of some major shifts happening on the world stage.
So yeah, that brings us to the big question we're tackling today. How on earth did this partnership, one that was so successful for 4 whole decades, it literally built one of the world's biggest manufacturing hubs. How did it all fall apart so fast? To really get the ending, you have to go back to the beginning. So, let's rewind. We'll call this first chapter the Golden Age. This was a time when Taiwanese money and expertise found the absolute perfect match in Shenzhen's raw ambition and its enormous workforce. And together, they created something that would completely change the game for electronics manufacturing worldwide.
It really started building up back in the 1980s, right when China's economic reforms kind of opened the door to the rest of the world. And Taiwanese businesses were some of the very first to see the huge opportunity. A really key moment was in 1988, when a little company you might have heard of, Foxconn, set up its first factory in Shenzhen. And that one move just kicked off a tidal wave of investment that kept growing and growing, all the way to its peak in 2010.
And what a peak it was! In that 1 year, 2010, Taiwanese companies poured a jaw-dropping $14.6 billion into mainland China. A huge chunk of that cash flowed straight into the factories and production lines of Shenzhen and the whole Pearl River Delta region.
So why did this work so incredibly well for so long? Well, it was the perfect win-win. Taiwanese firms got everything they needed: cheap labor, friendly government policies, and access to a workforce that was just massive. And in return, Shenzhen got the capital and the technology it desperately needed to grow, which created millions of jobs and earned it that famous title, China's export champion. Everybody won.
And just to give you a sense of the sheer scale we're talking about, just look at Foxconn. At its height, its campus in Shenzhen wasn't just a factory. It was like a city within a city. It employed over 200,000 people, all assembling products for giants like Apple. It was this incredible concentration of people and money that turned Shenzhen into the undisputed center of the electronics world.
But you know how it goes. That golden age just couldn't last forever. The turning point came, and it was fast, and it was decisive. So this next part is all about the great unraveling. Why this seemingly unbreakable partnership suddenly just shattered.
The one event that changed everything happened in a single year, 2018. The moment the US-China trade war kicked off, it created a whole new reality. Suddenly, making things in China to sell in the US came with a huge new price tag and a ton of unpredictable political risk.
And that set off a massive chain reaction. First, you had the US tariffs, which made all those products coming out of Shenzhen way more expensive. Then, big global companies had this sudden realization that, hey, maybe putting our entire supply chain in one country is super risky. And the result? Taiwanese firms, the absolute backbone of that supply chain, were forced to de-risk, which is really just a fancy corporate way of saying we've got to get out of here and diversify now.
So where did all that money and all those factories end up going? Well, a huge amount of it shifted over to Southeast Asia. Think countries like Vietnam and India, which were offering cheaper labor and great incentives. Some of it actually moved to the United States, and a good chunk even went back home to Taiwan. The one place it was clearly flowing out of was mainland China. But hey, it wasn't just the trade war pushing them out. There were also growing pressures from inside China. After decades of explosive growth, labor and land costs in Shenzhen just weren't cheap anymore. Plus, you had new, stricter environmental rules making it more expensive to run a factory. And of course, for many, the massive disruptions from the pandemic were really the final straw.
And that brings us to today, the aftermath. The partnership is, for all intents and purposes, over.
And what we're left with is a totally new reality, one with some clear winners, some clear losers, and a future for one of China's most important cities that is, frankly, deeply uncertain.
This new reality really is a tale of two economies. On one hand, you've got Taiwan. It's now being powered by super high-demand stuff like AI chips. Its economy is strong, its GDP is growing, and its trade with the US is absolutely booming. Then you have Shenzhen. It's stuck with a declining traditional electronics sector and is facing what its own officials are calling transformation pains as its key exports to the US keep slumping.
And the fallout for Shenzhen is really serious. As these Taiwanese companies pack up and leave, they create these huge holes in the supply chain that are incredibly hard to fill. This creates a very real risk of what's called industrial hollowing out, where the city basically loses its core manufacturing base. And of course, that leads to more and more pressure from unemployment, and it puts that coveted export champion title in real jeopardy.
If you really want to understand the scale of this collapse, just look at the investment numbers. We went from that peak of $14.6 billion back in 2010, all the way down to just over $3 billion in 2023. That isn't just a drop, that is a 20-year low. It's a cliff. The money has, pretty much, left the building.
So, we end up right back where we started, with that fundamental question. The partners that helped build Shenzhen into a global powerhouse are gone. They've moved on to new markets. The economic model that fueled 4 decades of unbelievable growth is broken. So I'll leave you with this. What do you think? Is Shenzhen's golden era truly over?